All right, welcome to your personalized deep dive. And today, we're going to be tackling FedEx Corporation's Form 10Q for the quarter ending November 30th, 2024.
Ooh, fun.
Yeah, I know, right? Now, you might be thinking, a financial report. Sounds thrilling.
Riveting.
I know. But trust me, these reports can be like treasure maps,
Yeah.
revealing all sorts of clues about a company's health,
Yeah,
strategy, and future prospects.
like that.
Our mission today is to decode this particular map and unearth the insights that matter most to you.
What I think is so fascinating about FedEx right now is they're not just delivering packages,
Right?
they're undergoing this massive transformation.
Okay.
It's like they're rebuilding the engine of a plane while it's still in flight.
Okay, I'm intrigued. Lay it on me.
Okay, so two major things.
Yeah.
First, they're consolidating FedEx Ground and FedEx Services into Federal Express.
Okay.
It's a big move to streamline their operations and create a single, unified network.
Hmm.
And second, they're planning to spin off FedEx Freight into its own separate company within the next 18 months.
So they're simplifying and also diversifying at the same time.
Yeah.
That's a pretty bold strategy.
It is.
But how is all this impacting their bottom line?
So their operating income is down,
Okay.
but it's not a simple story.
Okay.
You know how the economy's been a bit sluggish lately?
Right.
That's definitely playing a role.
Hmm.
People are buying less, businesses are shipping less,
Right.
and that means less revenue for FedEx.
That makes sense.
Yeah.
But I'm guessing there's more to it than just a slowing economy.
Right. They're also grappling with higher costs.
Okay.
Things like fuel, wages, and the expenses associated with all these changes they're making.
Sure.
But here's where it gets interesting. Despite these challenges, there are some bright spots.
Okay, give me the good news.
Okay, international shipments, particularly export packages, are actually up.
Okay.
In fact, international economy package volume surged by 44% this quarter.
Wow.
It seems people overseas are still eager to buy, and maybe they're a bit more willing to wait for their packages if it means saving some money.
So a shift in consumer behavior could actually be playing to FedEx's advantage.
Yeah,
That's an interesting twist.
it is.
It makes you wonder if this trend will continue.
Right.
Are we seeing a fundamental change in how people shop and ship internationally?
Yeah,
If so, FedEx will need to adapt its strategy to capitalize on this shift.
absolutely.
It also makes you wonder about the impact of losing that big USPS contract.
Yeah,
Didn't that expire recently?
it did, just back in September.
Okay.
And while the 10Q doesn't quantify the exact impact,
Right.
it's definitely a factor in their performance this quarter.
Sure.
Losing a major customer like the USPS is bound to affect both volume and revenue.
Definitely something to keep an eye on.
For sure.
Now let's talk about this Drive program.
Okay.
It sounds like their big bet on future profitability. Can you break down what it entails and how it's playing out?
So Drive is all about optimizing their network, reducing costs, and embracing technology. It's a multi-pronged approach, and they're already seeing some tangible results.
Okay.
For instance, they've implemented Network 2.0, which is all about making their pickup, transportation, and delivery processes more efficient.
Okay.
They've rolled this out in over 200 locations across the U.S. and Canada.
So this isn't just some theoretical plan, they're actually putting it into action.
Exactly.
What kind of changes are they making on the ground?
Well, they're experimenting with using contract service providers instead of employee couriers for some deliveries. It's a way to potentially reduce labor costs and increase flexibility.
Okay.
And on the cost-cutting front, they've announced a workforce reduction plan in Europe.
Ah, yes, the workforce reduction.
Yeah.
While those cost savings are significant,
Yeah.
potentially $125 to $175 million annually.
Yeah, it's a lot.
How are they ensuring that they retain the talent they need to innovate and stay ahead of the competition?
That's a crucial question.
Yeah.
The 10Q does emphasize their commitment to attracting and retaining top talent, so it seems they're aware of the challenge.
Okay.
But only time will tell how effectively they can balance cost-cutting with talent development.
Absolutely.
Yeah,
It's a tightrope walk, for sure.
it is.
Now, all these changes must require significant investments.
They do.
What's their capital expenditure outlook like?
They've budgeted $5.2 billion for 2025.
Okay.
That's slightly down from the previous year, but still a substantial amount.
Right.
A significant chunk of that spending is dedicated to modernizing their aircraft fleet with fuel-efficient models.
Interesting.
Yeah.
So even amidst cost-cutting measures, they're prioritizing sustainability and long-term efficiency. That seems to be a recurring theme here.
It does.
And it makes sense considering rising fuel costs and growing environmental concerns.
Yeah.
But beyond the financial and environmental implications, this investment in modernization signals something deeper about their long-term strategy.
What do you mean?
Well, it suggests they're not just reacting to current pressures,
Right.
but actively shaping their future.
Uh-huh.
They're betting on a world where efficiency, sustainability, and technological advancement will be key differentiators in the logistics industry.
I think you're right.
So they're not just delivering packages, they're delivering a vision for the future of shipping.
I like that.
Okay, I'm officially hooked.
Good.
What else did you find in this financial treasure map?
Let's talk about their cash position and what they're doing with all that money.
Okay.
After all, you can't transform a business without a solid financial foundation.
Let's dive into that in part 2 of our deep dive. All right, we're back and ready to delve deeper into FedEx's financial landscape.
Okay.
Last we left off, you were about to unpack their cash situation.
Right.
What's the story there?
So their 10Q shows they have a healthy $5 billion in cash and cash equivalents on hand,
Okay.
plus another $3.5 billion available through credit lines. That's a pretty solid war chest for navigating these turbulent times and funding their ambitious transformation.
That does sound like they're in a good position, especially considering all the investments they're making.
Right.
But what are they actually doing with all that cash?
Well, they're using some of it for stock buybacks.
Okay.
$1 billion worth this quarter alone.
Hmm.
Think of it like this. When a company believes its own stock is a good deal, it buys back shares.
Okay.
This usually signals confidence in their future performance and can boost the value of the remaining shares.
So it's a way of putting their money where their mouth is, showing they believe in their own future.
Exactly.
But you mentioned something earlier about cash held in foreign jurisdictions.
Yeah.
That sounds intriguing. Tell me more.
Yeah, they've got $2.7 billion sitting in accounts outside the U.S.
Wow.
This is likely part of a tax strategy called a permanent reinvestment strategy. Essentially, by keeping profits earned overseas in foreign accounts, they can potentially avoid paying U.S. taxes on those earnings until they bring the money back to the States.
Ah, so it's like a financial loophole that helps them maximize their profits.
You could say that.
Makes you wonder what their long-term plans are.
Yeah.
What are they going to do with all that cash overseas?
That's the million-dollar question.
Yeah.
Are they planning major investments abroad? Are they waiting for more favorable tax conditions to repatriate those funds?
Right.
It's something investors will be watching closely.
Okay, intriguing indeed.
It is.
Now every business faces risks, and FedEx is no exception.
True.
What are some of the potential potholes on their road to success?
Well, 10Q lays out several key risk factors.
Okay.
We've already touched on the economic slowdown and the challenges of managing costs.
Right.
But there are broader forces at play, too.
Okay.
Geopolitical risks are always a concern for a global company like FedEx. Think about the ongoing war in Ukraine, instability in the Middle East, and trade tensions between major economies. Any of these events could disrupt supply chains, increase costs, and impact their operations.
That makes sense.
Yeah.
It's like trying to navigate a ship through a storm. You have to constantly adjust course to avoid danger.
Exactly.
What other storms might they encounter?
Cybersecurity threats are a big one.
Okay.
FedEx handles massive amounts of sensitive data. Customer information, shipping details, financial records.
Yeah.
A data breach could be catastrophic, damaging their reputation and costing them a fortune.
Right.
They also have to navigate the ever-changing landscape of data protection regulations, which adds complexity and compliance costs.
It's a high-stakes game for sure.
For sure.
And speaking of high stakes, they're facing several lawsuits, some related to wage and hour violations and others stemming from accidents involving their vehicles.
Yeah.
How big of a concern are these legal challenges?
Well, it's hard to predict the outcome of any legal case. These lawsuits are definitely worth monitoring.
Okay.
If judgments go against FedEx, it could impact their financials and reputation.
Right.
It's a reminder that even a giant like FedEx isn't immune to legal risks.
True. It's like a constant game of chess trying to anticipate and mitigate risks on multiple fronts.
Exactly.
Now, earlier you mentioned something that caught my eye, FedEx's use of derivatives.
Oh, yeah.
I'm not a finance whiz.
No worries.
Can you explain what those are and why they matter in this context?
So imagine you're running a lemonade stand, but you have to buy your lemons from another country.
Okay.
You agree on a price, but then the exchange rate between your currency and theirs changes.
Okay.
Suddenly, those lemons cost you more than you expected. That's the kind of risk FedEx faces all the time because they operate globally.
Okay, so it's like currency fluctuations can squeeze their profits, just like your lemonade stand example.
Right.
But how do derivatives help?
Derivatives are financial contracts that allow companies to lock in exchange rates. It's like buying insurance against those unpredictable currency swings.
Hmm.
FedEx uses a variety of derivatives, including ones tied to debt they have in foreign currencies, and others called cross-currency swaps.
Okay.
It gets a bit complex, but the key takeaway is they're using these tools to manage their exposure to currency risk and protect their bottom line.
So it's a way to hedge their bets and minimize losses in a volatile global economy.
Yeah.
Smart move. Now, speaking of smart moves, they have this supplier finance program.
Yeah,
Can you refresh my memory on what that is and why it's significant?
absolutely. Imagine you're a small business owner who supplies FedEx with boxes.
Okay.
You ship a big order, but then you have to wait weeks to get paid.
Right.
That can put a strain on your cash flow, right?
Definitely.
Cash flow is the lifeblood of any business, big or small.
Exactly.
FedEx's supplier finance program helps address this issue.
Okay.
They partner with financial institutions who provide early payments to their suppliers at a slight discount. So instead of waiting weeks for payment, you get paid almost immediately, which helps you keep your business running smoothly.
So it's a win-win situation.
It is.
FedEx gets to support its suppliers and strengthen those relationships, while suppliers get quicker access to cash.
Exactly.
Pretty clever. Anything else in this treasure map that we should highlight?
Yes, let's talk about their dividend, a key detail for investors seeking steady income.
Okay.
Back in November, they declared a quarterly dividend of $1.38 per share, payable in January.
That's good news for income investors.
It is.
But can they afford to keep paying those dividends, especially with all the changes and challenges they're facing?
That's the big question.
Right.
The answer depends on how well they execute their D-Drive program, manage their costs, and navigate those external risks we discussed.
Okay.
Investors will be scrutinizing their earnings reports and cash flow statements for signs of dividend sustainability.
So it's a bit of a wait-and-see situation.
It is.
Now, before we wrap up this part of our deep dive, there's one more aspect of their business I want to explore: their commitment to sustainability.
Okay.
They've set a pretty ambitious goal of achieving carbon neutrality by 2040.
It's a big one.
How are they planning to pull that off?
It's a monumental challenge, but they're not just paying lip service to sustainability.
Okay.
They're investing in fuel-efficient aircraft, exploring alternative fuels, electrifying their vehicle fleet, optimizing delivery routes, and even developing sustainable packaging solutions.
Wow.
It's a multifaceted approach that will require significant investment and innovation.
It sounds like they're taking it seriously.
They are.
But beyond the environmental benefits, is there a business case for all this?
Absolutely. Consumers are increasingly demanding sustainable products and services.
Right.
And investors are paying close attention to a company's environmental, social, and governance (ESG) performance. So FedEx's commitment to carbon neutrality could give them a competitive edge and attract both customers and investors who value sustainability.
So it's not just about doing the right thing, it's also about doing the smart thing for their business.
Right.
It seems FedEx is weaving sustainability into the fabric of their operations, not just treating it as a side project.
Exactly, and that's a powerful message to send to stakeholders. It shows they're thinking long-term and aligning their business with a more sustainable future.
Right.
But we've only scratched the surface of what this 10Q reveals.
I agree. There are layers to this story we haven't even touched yet.
Right.
So stay with us as we continue our deep dive in part 3.
Okay.
We'll be uncovering subtle clues about FedEx's culture, leadership, and overall strategy.
Sounds good.
It's like we're piecing together a puzzle, one intriguing detail at a time.
I like that.
Welcome back. We've covered a lot of ground in our FedEx deep dive,
We have.
exploring their financials, their strategic shifts, and the challenges they face.
Right.
But now, for the final part of our journey, let's go beyond the numbers and delve into the less tangible aspects of their business. It's time to play corporate detective
Oh, fun.
and see what clues we can find about their culture, their
Yeah.
leadership,
Yes.
and their overall vision for the future.
I love this part.
Okay.
It's like reading between the lines to uncover those hidden insights that aren't explicitly stated in a financial report.
Yeah.
And trust me, there's a lot to unpack here.
Okay, I'm all ears. What kind of clues have you unearthed?
One phrase that jumps out at me from the 10Q is revenue quality strategy.
Okay.
They mention it multiple times, and it's clearly more than just a buzzword.
So it's not just about chasing growth at any cost.
Right.
They're being more selective about the business they pursue.
Exactly. They're focused on attracting and retaining high-value customers,
Hmm.
optimizing their pricing and streamlining their services to maximize profitability.
Okay.
Think of it like a chef refining their menu.
Right.
They're not just adding more dishes, they're carefully crafting each offering to create a more profitable and sustainable business.
It makes sense, especially in a slowing economy. It does.
When growth is harder to come by,
Right.
you need to be laser focused on getting the most out of every customer relationship.
Absolutely.
And this focus on revenue quality
Yeah.
aligns perfectly with their drive program and their consolidation efforts.
Mm-hmm.
It's all part of this larger transformation,
Right.
this shift from a volume-driven approach to a value-driven one.
Exactly.
So they're essentially rethinking their entire business model.
Yeah.
It's not just about delivering packages faster, it's about delivering value to the right customers in the most efficient and sustainable way possible.
You got it.
Now let's talk about something we haven't touched on yet. The looming FedEx Freight spinoff.
Okay.
This is a huge development, and I think it speaks volumes about their long-term strategy and their willingness to make bold moves.
For sure.
But what are the implications both for FedEx and for the broader shipping landscape?
Hmm.
What happens if the spinoff creates two separate competing entities?
That's a key question.
It's possible they'll maintain some level of cooperation,
Yeah.
leveraging each other's strengths,
Okay.
but there's also the potential for rivalry, each company vying for market share.
Right.
It'll be fascinating to see how this dynamic plays out and what it means for customers and investors.
Lots of uncertainty, but also lots of potential.
Right.
If they play their cards right, the spinoff could unlock significant value for both companies.
Absolutely. Now, another clue that caught my eye relates to their workforce.
Okay.
They highlight the importance of attracting and retaining top talent, but they also acknowledge the challenges they face,
Right.
especially with the ongoing driver shortage.
It seems like they're trying to balance the need for efficiency with the need to invest in their people.
Yeah.
That's a tough balancing act, especially when you're also implementing cost-cutting measures and workforce reductions in some areas.
It is, and it suggests they understand that a company is only as good as its people.
Hmm.
Investing in employee training, development, and well-being is crucial for long-term success. It's a message that resonates with investors who are increasingly focused on companies with strong ESG principles.
So it's not just about maximizing shareholder value.
Right.
It's about creating a sustainable business that benefits all stakeholders, employees, customers, communities, and the planet.
Precisely, and I think that's a key takeaway from this deep dive.
Yeah.
FedEx is navigating a complex landscape, and their success hinges on their ability to adapt, innovate, and balance competing priorities.
Well said.
Thank you.
We've covered a lot of ground today,
We have.
from their financial performance and strategic initiatives to the risks they face and their commitment to a more sustainable future. And most importantly, we've equipped you, our listener, with the knowledge and insights to form your own conclusions about FedEx and its role in shaping the future of the shipping and logistics industry.
Absolutely.
Remember, this was just a glimpse into the world of FedEx.
Right.
There's always more to explore, more to learn, and more to discover.
Yeah.
So stay curious, stay informed, and keep digging deeper.
Good advice.
We'll be back with another deep dive soon, ready to unearth more hidden treasures from the world of business and finance.
Sounds good.
Until then, happy exploring.